started off yesterday, right? So we are doing one of the last topics of A2 economics. This is last topic, major topic of A2 economics. And then after this, we'll see, we might have missed few smaller topics. So we'll complete those before we jump to past papers practice. But this is the final major topic that we are left with, right? In A2 economics. And the name of this topic is growth versus development, right? So I mean, there are different words that you can use for this topic, but what we'll primarily talk about is that what is economic growth of a country, right? And similarly, what is economic development? And we'll talk about how to measure growth and development, right? So first of all, we'll obviously talk about the the understanding, the definition, the meaning of growth, and similarly the meaning of development. And then we will talk about the ways through which we measure growth and development in an economy. Now, why is this important and why are we talking about this, right? So growth is, as we discussed, is basically how fast a country is growing, right? So growth is how fast a country is growing, which is calculated through, how do we calculate growth, students? How do we calculate growth of a country? Through recording or calculating the percentage change in GDP. So by calculating the percentage change in GDP, we calculate how fast the country is growing. Excellent, Arbab, that's correct. The percentage change in GDP, right? So if there is 5% economic growth rate, if there's 5% economic growth rate, that means, that shows that compared to last year, percentage change in GDP. So this shows that compared to last year, the country's GDP increased by 5% and so on, right? Okay. Now, this is what growth is. Now, what is development? We did talk about this and we'll talk more about this in today's class. Development is the quality of life in a country, right? So simply speaking, the standard of living or quality of life, right? So what it actually shows is how well off the citizens of any country are, how well off the citizens of any country are. That is known as quality of life. Students, are you getting? Is this simple? Quality of life, right? Standard of living. You can also write this down as quality of life / standard of living. Any confusion so far? Standard of living. Any confusion? Okay. Now, students, if we have to look into the idea that this country is progressing and this country is becoming more developed, we need to have some indicators. We need to have some indicators through which we can tell that which country is growing, which country is developing, and if this country or any other country is better than another country, like to compare between countries and so on, right? So in this topic, we'll talk about how do we measure growth, which is the topic for our today's class. How do we, what are the different indicators of growth, or different, you can say, different indicators of growth or different measures of growth, right? So we'll talk about that in today's class. And similarly, once we have talked about growth, we will move on and talk about development, right? Now, what do I mean when I say measures of growth? Measures of growth basically means what are all the different indicators that you can use to measure growth of a country, right? So far, we only know of one measure, that is GDP. Students, think about this. GDP is not the only measure of growth, right? It is one of the many, national income statistics, as you can say, right? Measures of, we can also call this measures of growth or / measures of national income statistics, right? Or measures of, let me write this down and then I'll read your comment. Measures of national income statistics. Measures of national income statistics. National income statistics, right? So we already know what is GDP, but we'll talk a little bit more about it in today's class. And then we will also discuss what are other metrics or what are other measures of national income, right? Right. Okay. Arbab, so let me give you a little bit of perspective here, right? So yes, obviously, by looking at the employment levels in a country, what Arbab said, yes, by looking at the employment levels in a country, we can tell whether the country is growing or not. Why? Because there's inverse relationship between the two. Every time there is economic growth, students, this should be very simple and obvious for you to understand. Every time a country is growing fast, right, what happens to its unemployment, right? Higher the economic growth, obviously that always leads to, right? This is natural. This is, natural to, to assume that higher the economic growth, the faster the country is growing, which means more businesses are setting up, which means that businesses are expanding and they are looking for people for their, to work in those organizations. So that definitely will result in lower unemployment, right? But here we are talking about how do we measure the size of the economy, right? So how do we measure exactly? How do we measure the size of the economy? That is what we talk about. We did talk about GDP and we did talk about GDP per capita, but today we'll talk about some other indicators of national income as well, right, students? Now, have a look at this, right? Measures of growth, or measures of national income statistics, right? You can use any of the wording that you're more comfortable with, but normally measures of national income is a better term to define this. Why? Because what is national income? Now, please pay attention to what I'm about to explain over here. National income is what? National income is basically the income of all the people living in a country. Do you agree with me or not? If I say, what is your income? That would be a little, irrelevant question for you because you guys do not work. But let's say if anyone asks me, what is my income? I can tell them a number, right? If someone asks me, what is my household income? Household income would include, let's say, my siblings, my spouse, or whoever in my house, my parents who are working. Students, are you getting me? So that is my household income. And similarly, if someone says, what is Pakistan's national income? This means what is the income of all the people who are living in Pakistan? And that is what GDP is. That is what national income is, right? Right? Above, what is 25,000? Right? Arbab, are you following me? How many of you understood what I just said? National income is the total income of all the people living in Pakistan. Is the total income of all the people living in Pakistan. Any confusion so far? Students, please stay with me, right? Is everyone clear on this? Do you guys know what we're doing today? I know this is a little tricky concept, so that's why I spend some time to explain you exactly what we're about to talk here. Right, okay, everything is clear. Great, perfect, let's move on. So what is national income? As I just told you that if you ask someone's his or her income, that would be one person's income. Similarly, if you ask that person, what is your household income? Household includes all people that live with that person in his or her house. That can include, husband, wife, siblings, parents, blah, 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 right? So that would be their household income. Similarly, national income means within the borders of a country. So within the borders of our country, all the people who are living, what is their total combined income? That is national income. Now, measures of national income statistics. So the first one that we have already discussed yesterday, but we will talk about that again, that is GDP. GDP stands for gross domestic product. What does GDP stands for? GDP stands for gross domestic product. Now, exact definition of GDP would be the total income of all the people living within the borders of Pakistan. So whether they are Pakistani nationals or they are not, anyone who is living in Pakistan, his or her income would be part of Pakistan's GDP. Students, do you understand me? So even the foreigners who are living in Pakistan, their income will be part of Pakistan's GDP, right? If there is a business that is producing in Pakistan, but that is not a Pakistani business because, it's an international business, let's say Toyota. So if Toyota is manufacturing, Suzuki is manufacturing, Honda is manufacturing in Pakistan, so the revenue that they generate, the revenue that they generate, the worth of goods and services that they produce would be part of Pakistan's GDP because they are producing within Pakistan, right? As well for GDP. What is the other definition? Rabab, what's the other definition? So GDP is national income. Okay, so you're saying it is the total value of all goods and services produced in a country. That's correct. But now think about this. Value of all goods and services produced in a country, that is also telling you the same thing, but both of these definitions go hand in hand, right? So another way to look at this, because this total value of goods and services is showing you what? This is showing you the income that Pakistanis, this shows you the income that people who are living in Pakistan have earned, right? So let me write down the definition. So GDP is, gross domestic product is aggregate meaning total, right? You understand the word. Is aggregate income of all the people who are living in a country. Any confusion so far? Right. So the other definition is also correct. But when we talk about national income, then we mean we are looking at GDP from the income point of view. Students, we are looking at GDP from the income point of view, right? Now, students, think about this. Now, this can be a little tricky, but I'll try to explain this, right? So let's quickly look at this, and then I want to explain you something very important. So what we are doing in today's class, measures of national income statistics. National income is the total income of all the people who are living in the country. Right now, there are different indicators or statistics for national income. The first one is GDP, that we have always heard, we have always talked about, which stands for gross domestic product. Now, what exactly is gross domestic product? Gross domestic product is the aggregate income of all people who are living in a country, whether they are Pakistani nationals or they are foreigners. We don't really care, right? Okay, now think about this. The other definition of GDP is the total value of all goods and services produced in a country. Now, you have to listen to me very, very carefully. Now, how the two things are equating? On one hand, we say that GDP is right? So on one end, we said that GDP is the total value of all goods and services produced. And on the other hand, we are saying that it is national income. Students, are you getting what I'm about to explain you? Are you getting me? Total value of goods and services produced in a country, right? And we are equating this with what? We are equating this thing with national income, that it is the national income, which means it is aggregate income of all the people who are living in Pakistan. Now, I will explain you that how the two things are exactly the same. Aggregate income of all people, people living in a country. Any confusion so far, students? Do you understand where we are heading with this? Do you understand where we are going with this? Okay. Now think about this. Let's talk about one business and let's try to apply this to the entire economy then. Let's say, okay, now mega lecture. So what is mega lectures, model, right? How do they earn money? It's a business. It's a, normal business, just like any other business. So what they do, they have teachers, and those teachers are teaching classes, and then students pay for the classes. As simple as that, nothing complicated, right? So the fee that students pay us is our revenue. Students, the fee that students pay us is our revenue. Do you agree with me? Right? So for students, it's an expense, it's an expenditure on education, but for us as a business, it's a revenue. It's money coming in, that is our revenue. Okay. Now from this fees, what do we do? What do we do with the money that we collect every month? What do we do with the money that we collect every month? Come on. What do we do with the money that we collect every month? Right? Let's say, right. We pay employees. We are the employer, right? We provide services. No, that we are doing. But in terms of the money that we receive, Isha, where are we spending that money? Where does that money go? That comes to our bank accounts. You pay us in our bank account. We collect the fee, but then how do we spend it? That's my question, right? So obviously we pay employees. Teachers are our employees, right? So I will also get my salary for the teaching that I'm doing here, right? What else do we do with that money? We pay obviously rent, electricity, right? We have some office, right? We pay rent, we pay electricity. We have other expenses, right? Office expenses, I don't know, there can be other things and so on, right? So this is how we're spending our money. But some of this money is still saved, right? From the fee that we receive, some of that money is saved at the end of the day. What is that called? What do we call that? Revenue minus expenses is equal. Exactly. That is profit. That is profit. Now, students, you have to listen to this very carefully. So when we pay employees, it becomes salaries or wages. This is income for whom? Salaries and wages are income for teachers. Do you agree with me? Or the workers? Do you agree with me? Rent becomes income for whom? Exactly. Becomes income for whom? Right? It becomes income for the landlord, right? The person who owns the building, right? Landlord, the person who owns the building where we have rented our premises for office. Do you agree with me? Electricity becomes income for whom? The WABDA, right? Electricity company, right? Or I can just quickly write down WABDA, right? And so on. And the money, and obviously there are other expenses as well that we have not listed over here, but I was just trying to give you an idea. And the profit that is made by the company at the end of the day, it becomes profit for, sorry, it becomes income for whom? So profit is also someone's income. Whose income is this? Owner, exactly. The business owner or the entrepreneur, right? Whoever owns the business. Are you getting me? Exactly. Excellent, right? So students, think about this. Now, do you understand the fee that you paid us? Let's say this month we collected this much of fees, right? 2.5 lakh rupees, right? Or 250,000 rupees, whatever you want to call it, right? So if we collected 250,000 worth of fee, that is the value of goods and service, or forget about, we do not produce any good, right? So this is the value of the services that we produced. Do you all agree with me? And that entire amount that the fee was received, entire amount of the fee received became someone's salary, became someone's income. That became someone's income. Students, are you getting me? So this is why the total value of goods and services that are produced in an economy are basically producing income for someone. Either the employees or the profits becomes the owner, the income of the owner, and so on and so forth, right? So that is why whenever you use the definition of GDP as the total value of goods and services, so that is also correct. Or if you say that it is the aggregate income of all people living in a country, that is also correct. And these two things are basically referring to the same idea that the total value of goods and services that you produce would be someone's income in that country. Right? How many of you are absolutely clear? How many of you are absolutely clear? When you order something from KFC, the value of your order, so let's say if you ordered something for 5,000 rupees, that will be split in same, in something similar way, right? So some of that 5,000 will go to the, to the company from where they buy it, from where they bought food supplies. Some of that would become the salary of the people who are working in the KFC restaurant. Some of that would become the income for the rider who came to deliver that order, like food order to you. And the remaining amount would become the profit for the restaurant owner, right? Now, is every one of you absolutely clear what I meant? Right? And obviously tax become, no, tax is basically, think about this, tax is not a separate income. It is tax, but tax is taking income. Now, after all of this has happened, then government is sitting there, government says, okay, corporation tax, right? So whatever profit the owner earned, we will take a chunk of that. Similarly, whatever salaries teachers earned through mega lecture, we'll take some of that as tax. So it is these people's income, but that is, some of that is taken away by the government in the form of taxes, right? So don't complicate it unnecessarily at the moment. Tax is from the GDP. Whatever GDP is made, whatever value of goods and services are made in the country, some proportion of that is going into the government. So it's just like someone earns and government comes in and takes away some chunk of that. This is how it happens, right? But don't bring taxes at them. But you got my point, right? Easy. Any confusion? Is there any confusion? Anything you want to ask me? Right? So now, always be clear that either you define GDP as the total value of goods and services produced in a country, or you define GDP as the aggregate income or total income of all the people who are living in that country. It means the same thing. It means the same thing. Okay, now we move on. And first national income statistic that we have talked about so far is GDP. Any confusion so far? We looked at the definition. We know that GDP is gross domestic product, which is the total value of all goods and services. GDP is the total income of all people living within borders of Pakistan, right? Now, that is what we discussed. Now, there's another measure of national income, and that is known as gross national product. Another measure of national income, another way through which we can measure the national income, which is the total income, is through gross national product. Now, what is gross national product? Students, you have to pay close attention. Now, let's say we are not interested in knowing the income of people living within Pakistan. However, we are more interested in knowing the income of Pakistanis, people who are Pakistanis by their nationalities. Students, we are more interested in knowing the income of Pakistanis, not people living in Pakistan, because Chinese are working in Pakistan, Americans might be working in Pakistan, Britishers might be working in Pakistan, but we are interested in finding the income of only Pakistanis. Then in that case, what will we do? Students? In that case, we will, right? In that case, we will calculate income of only Pakistanis, right? So think about this. GDP, this is the total income of all people living in Pakistan, whether they're Pakistanis or not, we don't differentiate. But in GDP, when we add net income, right, from abroad, right? So when we calculate net income from abroad, we get gross national product. Now, what is this net income from abroad? Now, think about this. Students, you have to pay close attention. Any income that our people are earning in foreign countries, right? Now, listen to me very carefully. Income earned by Pakistanis living abroad. Income earned by Pakistanis living abroad. And from this, we subtract what? The income of foreigners who are living in Pakistan. Income earned by foreigners, because they are technically not Pakistanis, right? So we don't want to include their income in our gross national product, right? So in a gross national product, we will not have the income of foreigners, right? Income earned by foreigners living in Pakistan, earned by Pakistanis abroad, minus income earned by foreigners living in Pakistan. How many of you got this? Did you guys understand what I've written over here? Living in Pakistan. And that is basically your net income from abroad. That is your net income from abroad. Is this making sense? Or is it too complicated? Please tell me if you are getting this. Right. So how many of you understood this? Right? Is it simple? Just give me a second. Right. Okay. So is this clear? Right. Is GNP. So what's GDP and net income? Think about this. Okay, have a look at this. Come back over here, right? So gross domestic product is the same that we have looked at, we have talked about, right? Income of people living in Pakistan. Income of people living in Pakistan is gross domestic product. Now that includes, the problem with GDP is that it includes income of only the people who are living in Pakistan, whether they are Pakistani nationals or not, right? GDP includes income of everyone within the borders of Pakistan. Now, gross national product has a slightly, or gross national income, sometimes we say gross national income, sometimes we say gross national product. The focus of GNP, gross national product, is something different. Gross national product only wants to calculate the incomes of Pakistanis. It only wants to calculate the income of Pakistanis. So in that case, what we do is that we, from GDP, in GDP, we add net income from abroad. Now, what is net income from abroad, right? So income earned by Pakistanis living abroad. So I'm sure some of your family members, right? Or you might not, if no one from your family is abroad, you would know people who are Pakistanis, but they're settled in USA, UK, Canada, Australia, and in other countries, right? So but their nationality is Pakistani, right? So they will be earning some income over there. So you add up the income of all the Pakistanis who are living abroad, right? In Canada, USA, and so on. And then you subtract from that income, the income that foreigners are earning in Pakistan, right? So if there's any American national working in US Embassy and UK national working in British Embassy, or anyone else, or Chinese working in Pakistan, or anyone, right? So you subtract their income from that. That figure will give you how much is the net income coming from abroad. How much is the net income coming from abroad, right? And then you add this to GDP to find your GNP. How many of you cleared on this? So this is making sense? Are there still any questions? Right. Is it making sense? Right. Right. Okay. Perfect. Perfect. Right. Students, so do understand I'm about to write down the definition of GNP. So GNP is basically gross national product, and this only includes the incomes of gross national product only includes the incomes of Pakistani nationals. Gross national product, and that would be calculates income Pakistani nationals regardless of their place of residence. Calculates income of only Pakistani nationals regardless of their place of residence. Regardless of their place of residence, right? So think about this, depending upon the actual objective, that what do you want to do for national income, what do you want to calculate, whether you want to calculate the income of only people who are living in Pakistan, or you want to calculate it only for the for Pakistani nationals, then you will decide whether to choose gross domestic product or gross national product, right? Does it make sense? Right? Is this clear? Any confusion so far? Is this simple? Okay. Now, moving forward, students. So we have talked about, so far we have talked about two statistics of national income. One is gross domestic product, right? Which was the total income of all people living in Pakistan, right? So you can think of GDP as value of goods and services. It is the value of goods and services produced within the borders of Pakistan. So anything that is produced within the borders of Pakistan, as I was telling you, whether that be produced by an international business. So Japan, Toyota is a Japanese brand, right? But even if it's producing, which it is producing cars in Pakistan, so the value of those cars is part of Pakistan's GDP, right? But in gross national product, we want to get a better idea of how much our nationals are earning. So we want to exclude that, right? Right? So what we do in GDP, we add net income from abroad, right? So what we do, income earned by Pakistanis abroad minus income earned by foreigners living in Pakistan. So that will now tell us this is net income from abroad. So when we adjust our GDP for net income from abroad, then we only get to find or see what is the income earned by Pakistani nationals, whether they are living in Pakistan or not, right? Calculates income of only Pakistani nationals regardless of their place of residence, right? Is this simple? Okay. Now, moving forward. Now, another indicator, national income statistic indicator that we have to calculate is, right, is net domestic product and net national product. Now, this can be a little tricky, but I will explain you. Should not be a problem. Net domestic product. Now, before this, we talked about gross domestic product and gross national product, and now we are about to look at net domestic product and net national product. Students, now this is what you have to pay close attention to, net national product. Now, what is the difference between gross and what is the difference between net? So when we use the word net, what we basically mean is that we will exclude the amount of money that was spent on depreciation. So in the net measures, net domestic product and net national product excludes the amount spent on depreciation. Now, what is depreciation? Is depreciation a new word for you? If it is, I can explain you. Excludes the amount of depreciation, right? Okay, now who can tell me what is depreciation? Have you heard the word before? No, no, depreciation currency, no, no, no. Depreciation happens in currency when the currency gets weaker. We're talking about depreciation of assets. Now, depreciation of an asset, if you don't know, that's not a problem. Let me explain you what that is. Oh, I cannot go. Okay, now what is depreciation? Have a look at this. So depreciation is basically the wear and tear of assets. So when you use any machinery, capital goods, assets, right? So those assets, machinery, capital goods, they lose their value, right? So the factories that are operational, assets value go down. Exactly, right? So what happens that every year companies are spending a certain amount to replace old, old assets and old machinery and so on and so forth. Depreciation is the wear and tear of assets. Students, are you getting me? So every year, let me give you a more specific example and then you'll better understand wear and tear of assets, right? So if you think of students, let's say a small example that I'm about to give you. Think about KFC, right? So KFC is a normal food, it's a restaurant, right? And whatever machines they're using in their kitchen, that can include oven, that can include, I don't know, cooking utensils like dishes and so on and blah, 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 whatever it is, right? Now, what happens is that every year, some of the older machinery would be replaced by KFC with new machinery, right? So obviously they're using it from a couple of years. So let's say they bought an oven. Think about this. So let's say there's any particular, restaurant of KFC in Pakistan, and they were using an oven for 5 years or 6 years, and now it's time to replace it because it's not good enough, it's not operational, or there is some major defect that cannot be repaired. Are you getting me? So that amount that was spent to replace that old asset is basically the depreciation for KFC. But right now we have just talked about one restaurant and one business. So when you add up the total amount that the economy spent in replacing that old assets, that will be the total depreciation that took place in the country during that time period. Students, are you getting me? Similarly, if you think of mega lecture, right? So what perhaps mega lecture has an office and it was using some furniture from 2 years or 3 years or whatever, right? And it's too old. And mega lecture thinks of replacing that, right? So we spend, let's say we spend what, right? So we spend, let's say 5 lakh rupees to replace old furniture with the new one, right? Now our depreciation for that year was, let's say 5 lakh, right? Similarly, mega lecture is one business. There were other businesses, let's say textile mills. So textile mills in Pakistan replaced some of their older machinery with newer machinery, and that costed them, let's say 5 million rupees and so on and so forth, or whatever it is, right? So are you getting? So this is basically the entire, if we calculate all the depreciation that took place in all the different businesses of Pakistan, that would be the total depreciation of the country. So when you subtract depreciation from GDP, right, what do you get? When you subtract depreciation from gross domestic product, you will get net domestic product. Students, are you getting me? So why are we doing this? Why is subtracting depreciation important? How many of you got this? Students, did you get this? Right? So for net domestic product, basically the way we calculate net domestic product is like this. Net domestic product is equals to gross domestic product minus depreciation is equals to gross domestic product minus depreciation. Is this making sense? Is this clear? Right? So that is what your net domestic product would be. And why are we subtracting depreciation? One very important point. Let me explain you that. So we subtract depreciation because, think about this, this amount is not increasing your production potential, right? The amount, 5 lakh rupees, I was giving you an example right now, 5 lakh rupees that Mega Lecture spent on replacing its old furniture, it did not add value as such. Are you getting me? Because it was just replacing something old with something new, right? Are you getting me? However, if we would have spent 5 lakh rupees to buy a new office space, because we're expanding, previously we were just in Islamabad, now we are opening up in Lahore and Karachi, and for that we had to buy new furniture. Now that is not depreciation, that is new asset, and that would add to our production potential. So that is what we will not, subtract. Right. Yes. Yes. Isha. So that is a very important topic from exam point of view. That's a very important topic. Some students find it confusing. Some students find it a little boring, but I can tell you for a fact that this is very important from exam point of view, and especially the later things that are coming up, like how do we measure development and so on and so forth, right? But I'm only explaining it to the extent which is tested, right? I'm not going in any detail because there's no point. So I'm just sticking to important things that are asked on the exam, because there are questions like what are different measures of national income statistics? Are those indicators of development? I mean, so they merge it. So they ask you what are different measures of national income. So you have to explain all of these four in detail, and then you have to tell them if these are good indicators of development or not good indicators of development. That is another thing that we'll talk about in tomorrow's class, right? Okay, now students, let's try to wrap this up before we and then comes in net national product. So who can tell me the formula for net national product? So what is the difference between gross national product and net national product? It will be the same difference which is between gross domestic product and net domestic product, right? So that would be gross national product minus depreciation. So the total depreciation that took place in the country during that year, if you subtract that from that, and why do we need to subtract depreciation? Because depreciation is not adding to the production potential of a business, right? Depreciation doesn't add to the production potential of a business, so it's better to remove it. It's better to remove it. Students, are you getting me? Right. Is it simple? Okay. Great. Perfect. Excellent. That's correct, right? So these are the four measures of national income statistics. Now, one thing that I want to say, so let's quickly recap it and then we'll stop here. So in today's class, we talked about that, there is growth. We are talking about growth and development, right? So what is growth? Growth only calculates how fast a country is growing, right? And to measure growth, you use one of these four measures of national income. Now, what is growth? Growth is basically, in the first class, we said growth is percentage change in GDP. That's correct. GDP is most commonly used measure. By the way, do remember that GDP is the most commonly used measure of national income. It is more commonly used than even gross national product, right? So, but to measure growth, you can use four different indicators or four different statistics, as we say. So you can use gross domestic product, right? Or you can use GDP. You can use gross national product, which is the income of only Pakistani nationals, regardless of whether they are staying, or you can calculate net domestic product, which excludes depreciation. So if you extract depreciation deduct depreciation from GDP, you'll get net domestic product, or you use net national product, which is NNP, right? Similarly, from gross national product, when you deduct depreciation, you get net national product, right? So these were the four statistics of growth, right? National income. Then we also talked about that the two definitions of GDP that we often come across. One is the total value of goods and services produced, and the other one is national income. These are exactly the same thing. Why? Because the total value of goods and services produced in a country basically represent you what? That basically represents you the income that different people associated with the business earn. So the fee that students pay to mega lecture is basically becoming income for our teachers. That is becoming income of the landlord, where we have rented out our office. It becomes income for the electricity company. It becomes income, and the remaining amount becomes income for the business owner, right? Is this clear? So tomorrow we'll move on and talk about whether these indicators are good enough for development. Tomorrow we'll talk about if GDP in general and these other indicators are good indicators of development, right? And then after that, we'll talk about what are other indicators of development and so on, right? So it's, as I said, it's a lengthy topic relatively, and it's a little tricky, but we'll spend enough time to make sure we have covered all aspects of it, which are important from exam point of view, because this is a very important topic from exam point, right? So we'll do that. So I'll see you tomorrow at the same time, right? And take care. And if you have any questions, do bring those questions tomorrow, right? I'll answer those. Take care. Have a good night.